Welcome back to Homes with Joan. I'm so excited today on this beautiful late summer morning to introduce to you a good friend and a lender, Chris Puzzuoli from Hall Financial. We are going to be talking about the different ways that first-time home buyers and also mortgages are working today in today's current market. Chris has tons of experience in working with first-time home buyers, refinancing, all the lending portfolios that we could ask for. So today we're here with Chris. You want to just give us a little bit of background about yourself and what you like about lending and why you're doing what you're doing?
Sure, absolutely. Well, first and foremost, thanks for having me. Absolutely. Really pleasure being here. And yeah, my name's Chris. I'm with Hall Financial. We're a residential lender in the area, local company, been doing this 25 years. We are in the business of helping people, same as you, right?
Yeah.
So it's not that, we are these mathematicians or, financial wizards. We just help people, and we understand the programs and the products, and so that's why we do what we do.
Yeah.
So, yeah.
Well, and that's I think a really big key point why Chris is here with me today, because first of all, thanks for accepting my invitation to help educate our community on what mortgages are, what lenders do. Lots of times people come to a realtor first and say, well, I want this kind of house. And my first comment kind of back to them is, well, let's see what we can get. We're on a team. We have a team aspect when it comes to buying and selling homes. A lender is a very key team member.
Yes.
We are in constant conversation as we're walking through that process of getting a mortgage for a family. So really, just to give us a little bit of background to help our audience understand what it is, you do, can you tell me what the difference between a mortgage broker is and going to Hall Financial?
Yeah, absolutely. That's a good question. So a broker, in their basic form is someone who is going to shop you and your portfolio, so to speak, your package that you bring out to different banks in the area and say, I've got this person, Joan, she's my client, she's got a credit score of this and that, and what kind of options can you give me that I can give to her? What we do, we are what's called a correspondent lender. That means we're lending you our own money. We are not shopping out to other banks to try to find a program that works. So we have our own programs, our own guidelines, our own underwriting, and it's not a huge difference, but it's a subtle difference.
Sure. Well, it's nice to go to the guy who has the money.
Right. Exactly. I don't have to depend on someone else.
Yeah. So if I'm helping someone find you, what would be what would be the very first question that someone looking for a lender could potentially ask you? Like, what's a really important question?
Yeah, so everyone's situation is different and every individual is different, but when most people I think of a lender, they think of what's your interest rate, right? Like, I'm going to go with the guy that has the lowest interest rate. And the reality behind that is most lenders, we don't really set interest rates. We're all kind of dealing from the same deck, so to speak, sure. Right? So interest rates kind of are what they are, and there's very little difference from one to another. I think where you find a difference is in the level of experience, the client service, the overall loan process, the understanding of going from step A through the end of the process. I think will vary greatly depending on who you're talking to.
Sure.
The speed, the technology, some of the banks are really good at banking, and their processes can potentially be a little archaic when it comes to the actual lending process. So that's just the other thing I would say is who are you comfortable with,
Absolutely.
Right?
I couldn't agree with that more. When someone's coming and they're looking to invest in this huge investment, probably the largest in their lifetime.
Absolutely, the largest, yeah.
They want to be able to say, I want to call Joan and ask that question. I want to, check with Chris. Or I might even say, let's talk to Chris.
Yep.
You know what I mean? So I know with Chris, because I have done, I've been privileged to be able to work with Chris in the past, that he is that responsive person. He does have the opportunity to reach out and say, hey, what's going on? I know we've talked on Sundays. I know we've talked on Saturdays.
Yeah, we have to.
I mean, it never ends in our
Yes,
world.
it doesn't.
But, we might not have the answer right then. At least we know where we're at.
Yeah.
So for me, so we know we have this client. Either you've referred them to me or I've referred them over to you as a potential lender. As in my role as a licensed real estate agent, I do a minimum of 3 lenders just because I don't want to be looking like I'm,
Right.
picking only one and only using one. It would cause chaos. So in this case, how long before, if I were to send you someone, that you could get me a pre-approval? Let's say I'm out on Sunday afternoon and they haven't gotten pre-approved, right? I always like pre-approval first, but if it hasn't happened, how long does it take for a pre-approval process?
It doesn't take as long as I think some people would think. Some of it will depend a little on someone's individual situation.
Sure.
If you are self-employed, you have 3 businesses, you have 7 houses, you have various income sources, those are obviously a little more complex. If you are a W-2, hourly employee, pretty straightforward. Couple hours, I mean, it's really that simple. It's not that much to it.
Yeah, and that would be, right off the bat, that kind of gives you an idea. Are we in the price range as to what we're even looking at? Because, we all know sometimes our dream homes are a little bit different than what we can afford. Yep. But that's okay too, because for me, I like to get people out in the field. I like them to be in a home and feel that home and make sure that it's a right fit, because pictures don't tell a story.
Right.
So once again, I think it's really important.
Most people that when they come, one of the questions I ask them is, they didn't just start thinking about this, 3 minutes ago before we picked up the phone together.
Right.
So they've already got an idea and a picture in their mind, similar to what you just said. And that's kind of what I'm trying to find out too. Like, just give us a number to start with. Give me an idea to start with, and it doesn't mean we're going to end here, but give us that target, and then let's work towards that first, and then we'll figure out, are we good, or can we go higher, can we go lower, what do we need to do?
Absolutely, and I know with my experience with you, that's worked very well. Sometimes we're going under because there's certain scenarios that make a home affordable, like maybe a tax base or, some of the other things that are different from community to community to community. So you might not in this community because the taxes are so much higher, but then over here across this line, all of a sudden your ability to buy a house is much greater.
That's right.
So let's say, another thing that I have a lot of times people are asking me, how much down payment do I need? It's a big question about down payment money.
Yep.
So
most mortgage programs are going to require, there's a few variants. It depends if it's your first home, there's certain ramifications or requirements. Then if it's a subsequent home, if you've already owned homes. The VA for veterans offers 0 down. So if you're a veteran, you can purchase a home with no money down. It is a fantastic program. And you don't have to pay any private mortgage insurance, PMI.
Right.
We'll talk more about that. If you are a first-time buyer and you are not a veteran, most programs are 3%.
Okay.
That's kind of the minimum, 3.5. If you already own a home and you want to buy your next house, it's usually 5%.
Oh.
Yeah. So.
Because you have a little bit of equity built up, and they're saying you have some more money to put into the game.
There is a way you can buy a home with 3% down if it is a subsequent home, but you pay a higher interest rate.
Oh, okay.
Usually it's it's not a huge difference between 3 and 5, so we usually kind of steer in that direction.
Right. So once again, this is like a big, huge jigsaw puzzle, and it's presented to people like, what do I do?
Right.
I don't know where to go.
Right.
I don't understand it. Who can help me explain it? So I think it's really super important that you're working, once again, to go backwards, working with the people that you trust, working with the people that know that the person in your toolbox is someone that you've had actual experience with, that you know that they are going to look out for the best interest of our clients. So next we're going to continue our conversation in our next segment regarding the mortgage industry. And I also have a friend of mine who's going to be sharing her first-time home buyer experience with us.
Just think, what if we didn't have local TV and radio? Where would I go for local sports, local politics, a mayor, city council, stuff that affects me every day? How about health? Who's covering things that endanger my family? I need to know now, as it happens, from sources I trust, people in my community. No agenda, no bias like you find on cable and social media. Just facts. For news I can trust, I stay local. Support your local station. Text TV to 52886 today.
Welcome back. We're going to continue our conversation in the lending world, and one of the big things, so I have a super excited client. They found the home of their dreams. They want to purchase this home. So I have to write up what's the purchase agreement, and there's certain information in that purchase agreement that I need to make sure we put in our offer. So within that offer, there's a line that says earnest money deposit. In layman's term, it's EMD. And basically what that is you're putting skin in the game to purchase this house. There's all different percentage amounts that can be put in there depending on what that homeowner has to offer into the earnest money deposit. So, and that's something that falls into the lending world too.
Right.
You know, we want to create a really good, strong offer so my clients can purchase this house. So once we turn in the offer, everything's been accepted, we deposit that earnest money deposit into my broker. It doesn't come to me, I work for a broker. And that becomes a part of their contract.
Right.
That contract then is sent over to you
Yep.
to start the work with the loan.
Yep.
So what happens after that then?
So the earnest money deposit that you're talking about,
Yeah.
The skin in the game, the
Yeah.
kind of the financial handshake that says I'm
Right.
serious about buying this house,
Right.
right? That becomes a part of your down payment typically.
Okay.
So it's different than your down payment. Your down payment is, I'm buying this house, it's $100,000, I'm putting 3% down, that means my down payment is $3,000.
Right.
Maybe your earnest money deposit in this case was $1,000.
Sure.
That $1,000 becomes part of the $3,000.
Okay.
So it's used towards the money you're going to need eventually come closing time.
Okay.
Okay?
Okay.
Does that answer?
Yeah, oh yeah, yeah, totally. Because someone says like, I don't know what my down payment, because I have to ask in the purchase agreement, what's your down payment
Right.
amount, and then what's your earnest money? What is all that? So they get confused.
Yep.
So thanks for clearing that up.
Sure.
So another part of, and this is kind of even like, so when you're doing your pre-approval, you of course are running credit reports.
Yes.
People get very nervous about credit reports. Things show up on credit reports that might not have been even associated to that person. So you're the guy who runs a credit report,
Right.
and you're the one who gets to talk to our client in regards to what that credit report is.
Yep.
What are you looking for in a credit report? What can we do to help people prepare to be pre-approved for their
Yeah, no, it's a great question. So much in today's world, the great thing is that everyone's aware of their credit score. There's a lot of tools that you can have to get access to what your credit score is. So the actual score, the numeric rating of your credit, is something a lender's going to look at. It's
Sure.
going to play a big part in potentially what interest rate you get, what loan programs you can qualify for. We are looking at the overall kind of picture. How much outstanding debt do you have? Do you have credit cards and student loans and car payments, and what are these monthly obligations that you have? That's part of your qualifying, because we're going to look at your income versus all of these obligations, all of these monthly payments that you make. That's going to determine how much you can afford.
Okay.
Along with the actual credit rating, the score itself. So, in simple terms, the better score, the better it is, right?
Yeah,
we want you to
yeah,
have as good
yeah.
a credit as possible.
Yeah,
So,
yeah.
but there are mortgage programs that kind of range across the spectrum.
Okay.
So don't think that if your credit score is not, 800, that you're, I can't buy a house. That's not the case either.
Good.
Anything usually north of 600 we can find a program.
Some
yeah.
program to offer
Yep.
for them. And so then, so are there opportunities for people who are self-employed or 1099?
Absolutely.
You know, because
Absolutely,
that's
yes.
usually people feel like, well, I don't have that W-2,
Yep.
and you know, how does that?
Yeah, it definitely is a little bit more complicated. If you're a W-2 or salaried employee, your income is very straightforward. It's very consistent.
Sure.
If you are self-employed, if you're 1099, if you do contract work, if your income comes from bonus or commission or something that isn't, you know, the same every week.
Right.
It's just a little different calculation. It's a little more involving. We're going to look into the exact history. Usually underwriting wants to see a history.
Yeah.
So if you're self-employed, we want to look at what did you report last year, what did you report the year before. And
So
that's
2
gonna be-
years.
yeah, kind of
Really
sort of
give that.
determine-
Yeah.
Yep.
And for first-time home buyers, sometimes that's a little bit harder because that history may not have been there yet.
Right.
They're starting it now.
Yep.
But I know that you do a lot to make sure that there's a good program that fits, because you actually care about what people are like.
Yeah, I mean, you know-
you're not out there just saying, I want them to get way more than they can afford. We
Yeah.
had that issue in our past. That is no longer
Right.
available,
Right.
and we don't do it.
No, we
So
don't. You know,
there's-
and one other thing on it too
Yeah.
is it's you know, I think there sometimes can be a conception of lending as, you know, you're behind this desk with this rubber stamp, right? And it's like either, you know, approve or deny, and
Yeah.
that's not really how it works.
Good.
It's a ongoing, like, you know, process. We look at everything we have right now. If it doesn't work, we talk about what do we need to do to get it to work.
Sure.
To
help.
So it's not like, you know, sorry, denied, next.
Yeah,
That's
yeah.
not really how we do it.
And it's also a way to continue to build that relationship,
Right.
because, you know, sometimes you kind of feel like, and I hope this doesn't offend anyone, but when you go to a lender, you kind of feel like, okay, I'm flashing you with everything I own, everything
Yeah.
I have. There's nothing sacred to me anymore, because my lender needs to know, like, really when I paid my last utility bill. You know, and it
We
seems
don't
like
usually get into that.
but you know what I'm saying. It
Right.
becomes very intimate. And
Yes.
those are conversations that you want to have, once again, with someone that you can trust.
Right.
I go and I see you out at, you know, a bar in somewhere having coffee, and, oh, yeah, we heard about blah, blah.
No,
That does not
that does not
happen in
no,
our
right.
world.
No.
We are held to very high ethical standards when it relates to our clients and their private information.
Correct.
So it's really, once again, just that, you know, getting to know who you're working with is a super important thing, and then it might not be as intimidating. And you kind of also mentioned this underwriter guy or girl. I always wonder, like, who's behind the underwriter?
Right.
Because we never know who the underwriter is.
No.
It's this unknown person that's a big part of this deal.
It's a huge part of it, yes, and you are correct. It's not like they come out and introduce themselves
No.
to you, or
Yeah,
you know, hey,
yeah.
I'm going to be working with you. No,
Yeah.
they very much are the behind the curtain, kind of the Oz.
Yeah,
behind it all.
exactly.
Yeah.
You know, but they must be the person that pulls all this information
Yes.
together, that helps you be able to determine and help our clients find what that next piece is. So we got the deal.
Yep.
We're pre-approved. We're ready to go. Everything happens. Appraisal is ordered.
Yes.
And you as a lender, the lender is the responsible party to order that appraisal.
Correct.
How does that process work?
Right. So even going back a little further, right?
Yeah.
The appraisal is going to tell us, the lender, because we're giving you the money.
Yeah.
We want to know what you're buying is worth what you're paying for it, right? So.
Be a good idea.
Yeah, so the appraisal is going to go out. It's going to search other homes in the area that are similar to the home that you're buying, and it's going to ensure that, oh, here's a house that sold down the street, here's this one that sold last month, here's this one a couple blocks away. They're all in the same ballpark, they're all similar style homes, and they're going to tell us what that home sold for versus the house that you are buying.
Sure.
Make sure it's worth what you're paying.
Okay. So
That's
it's
the
really
primary
your
function.
security.
Yeah.
It's the value is there. Your money and your value is there. So just one more quick question here before we go to our next segment. So what is PMI?
Yes, we referenced it earlier. So
Yeah.
PMI stands for Private Mortgage Insurance.
Okay.
And what the lender is saying is, back in the days, you needed to put 20% down to buy a house, right? That was the rule.
Yeah.
Lenders started to come out with programs to make it easier for people to buy homes with less of a down payment, but they wanted more security or more insurance for them.
Okay.
PMI stands for Private Mortgage Insurance. It's added insurance you're paying the lender because you don't have a lot of equity in your house.
Right, right.
The thought process is, if you bought this $100,000 house and you put 20% down, $20,000, if you have trouble making your payment, you're not just going to walk away. You got money invested in that house. If you bought this house for $100,000 and you put 3% down, and you get behind on your payments, you are maybe more inclined to just leave the keys in the front door and walk out.
Sure.
And that's what a lender does not want. They don't want to foreclose on your house. They don't want to deal with it. So the insurance is protecting the lender.
Okay. All right. Well, that's great information to know. And I know that really it goes, once again, just to reiterate, that's for people who don't have that 20%
Correct.
down, or
and
the
your
equity
credit
isn't
score
there, and
will
credit score.
determine that level of PMI. The better your credit is, the lower your PMI is.
So that's why it's really super important to find that lender that can explain all those different nuances to what that loan may look like. You have a number put in place by Chris, by the information that the purchaser gave to you to really come up with that whole full story. So really, the real estate person, Joan, has nothing to do with any of that. So in our next segment, once again, we're going to continue our conversation about the lending industry, what's going on in today's rate, and I also have a special surprise with one of our first-time home buyers who's going to join us. So thank you for joining us again. Like I told you, we have a little special treat next to us. This is Kenzie. She came to us through a friend that Chris and I both know. And Kenzie called me and said, Joan, I'm ready. I'm ready to buy my first home. I'm super excited. So Kenzie and I started working together to find out what you were looking for in a home, and she said, and I'm working with Chris Puzzuoli at Hall Financial, and so then Chris and I contacted each other, and were able to put together a package for what your dream was. Did we do okay?
Oh yes, you did a great job.
And I'm not paying you to say that, right?
No.
So with Chris having the opportunity to work with you on the lending side, Chris, you want to tell us a little bit about how that first-time home buyer process worked?
I think we got into a wonderful program for first-time buyers that's out now. It's a conventional loan option that can actually offer down payment assistance. And Kenzie qualified for that, and she was able to get $2,500 of down payment assistance that helps with that down payment that we talked about a little bit earlier. So
huge.
Yeah.
Yeah.
It was great.
Yeah.
Yep.
Yeah. And so with that, Kenzie found out that she could actually afford a little bit more of a home. And through our process, which started, I think, back in May, we did that a while ago. And Kenzie had the experience of a first-time home buyer where we put an offer in, super strong offer, ready to go, and then boom, all of a sudden someone came in and swiped that house away from us.
Yeah.
But Kenzie always had the best attitude to realize when it's meant to be, it's to be. And that has been such a pleasure, Kenzie, to work with someone that really realizes that we're in it together. We're all in it together. And then Chris was there saying, hey, Joan, I think maybe, we could look at a little bit more after seeing some more documents and taxes were done.
Right, yep.
We had a different price range that we could start looking at. And so Kenzie was just a trooper, always giving Chris what he needed,
Yes.
saying, okay, Joe, let's go take a look at this one. And I think one of the most exciting things we can share today is Kenzie is closing on her very first house in Orion Township tomorrow. It is an amazing, beautiful home for Kenzie to start her family with her Damon, her fiance, and their baby, and I'm just couldn't be more pleased for you, Kenzie. I really am excited.
I'm so happy.
Yeah. Well, we're happy for you, and honestly, the team approach that we came up with, did that work for you?
Oh, yes.
Yeah.
It was great.
Yeah, because we had that ability to all talk with one another and let each other know where we're at in the process. And I'd have to call Chris and say, Chris, we didn't get it, and he'd say, oh, darn it, what? We're gonna keep going. So having us behind you, hopefully lifting you up to what those next dreams were that were meant to be for you.
Absolutely.
So
yeah, and at each step too, as a different home would kind of come into focus, right? They'd be like, hey, we're going to see this one. So that's where we're able to provide Kenzie with information. Here's what we're thinking your payment range is going to fall into, and here's how much money out of pocket you'll need for this house versus this one versus that one. So yeah, and eventually we came across the right one.
Yeah, and that's where, once again, it takes a village. It really does. It takes a village. Yes. And the most important person in that village, of course, is our beautiful clients and friends. As we walk through this process. So like I tell my clients, I say, we're going to become like best friends for the next, however long it takes us to get you in your house. We are constantly on the phone. We're constantly crying with each other, laughing at each other, redesigning houses together, asking Damon, okay, how are we going to fix this? And then Chris is always there in the background saying, okay, we got you. When do you want it? What do we, So it really is all about that, cheerleading. So as a first-time home buyer, what was the most intimidating thing for you?
Definitely seeing if I got approved or not in order to buy the home and how much I got approved for, and the market today was intimidating.
Yeah, so, it is kind of, by putting those offers in, very strong offers, and then,
getting attached to houses that weren't mine.
There's a big emotional tie to all of that. But I have to say you were stellar.
Thank you.
Absolutely
so
stellar.
Are you, Joan?
Well, once again, it gives us joy. Chris and I both know because we do this like a lot more. We're doing it all the time. It's our jobs. You're doing it as where you're living, where your home is, where that is. So to have that connection with someone who knows, no, don't show me that house. You know what I mean? Don't take me there, or I really love this house. I really want to see this. I'm not sure. Well, guess what? She called it. She picked her house, and you can work that way with someone that you trust and you believe in, and you have that opportunity to work very closely with. And tomorrow is a big day.
Yes.
And you get keys to your new home.
I'm very excited.
What are you going to do first?
Paint
Paint
the baby's room.
Paint the baby's room. What
Yes.
color are we going to be?
I don't know yet.
Oh.
I haven't decided.
Okay.
I've yet to decide.
Yeah. Well, and with Chris and Hall Financial, I know they've been with you every step of the way.
Yes.
That anytime it's like, oh, I got to get more to Chris. Oh, I have to get more stuff to Chris. But that worked out okay too, right? It was an easy, simple process.
He answered every question I had, and I had a lot of them.
As you should.
Yes.
Right.
I mean that's what we want. If we have someone who's not like asking us what is PMI, what does it what do you mean I put money in and now I need to put more money in? How much do I need? So I know now through Chris, and because they do have the money, we know tomorrow when we go in, you have a document of all the information that Chris needs to be able to give you that loan and hand you those keys.
I know, I'm so excited.
Oh, well, once again, everyone, I certainly appreciate you spending time with us today. I'm very grateful that both Chris Puzzuoli from Hall Financial and Kenzie, our home buyer, was able to join us today to talk about what it looks like in purchasing that first home or any home. I hope we were able to answer some of those questions for you. I look forward to seeing you the next time. And please stay safe and well, and talk to you soon.